Yo, what's going on, y'all? Jay Trades here, back with another brand new video. And in today's video, I'm going to be going over my view on trading multiple pairs and assets, because this has been a very controversial topic for a very long time in the trading space, of whether trading one pair, like one trade a day, is a good set of rules, or if you should trade multiple pairs. And today, my job is to basically just go over the pros and cons of this to you guys. So if I can just turn all my indicators off. By the way, all these indicators are on the website if you guys are interested. And there's also a 7-day free trial for those that are interested in trying out before locking it in. But let's go over the pros and cons of trading multiple pairs versus one pair. So one pair. And when I say pair, I'm also talking about asset. It's the same thing, right? Same meaning. Hope you guys understand that. So one pair and one asset versus multiple pairs and assets. Now let's go over the pros. The pros of one pair and one asset is more focus and likely higher quality setups / win rate, because you're a lot more focused on one pair and you already have, for example, your structure, your draw and liquidity, everything prepared ahead of time for that one pair. You've been preparing maybe the day before for this asset. You've done a lot of like your own analysis on this asset ahead of time. That's the pro. So you typically have a higher quality, higher win rate, because you're focusing on the pair more, you're putting in all the confluences in sync, versus if you're trading multiple pairs, you could get yourself confused between a bullish pair versus a bearish pair, and then get your confluences and bias wrong or just mixed together, and that leads to lower quality setups. So pros of one pair, one asset is more focused and high quality setups. And oh, this disappeared. Okay. Higher quality setups, higher win rate, more focus. The cons, I would say, is less trade opportunities and less focus, well, which is pretty contradictory right there. So we'll just leave it like that. And then the pros for multiple pairs is you have more trading opportunities. And the cons is lower quality setups. This is literally like the main difference between the two. Okay, because let's say you focus on one pair, one asset, you will be able to master how that asset moves, because each asset, they all follow the algorithm of the market. However, they move slightly different based on their personality. I can give you guys one example, which is oil. I love trading oil, but on oil, it's a lot less likely to trade reversals, and you have a higher win rate just trading continuations, because oil loves to trend when it trends. And when it trends very heavily. So there'll be times where I'll be holding a target much further than my draw and liquidity, because the draw is on the higher time frame because of how volatile and how much movement oil provides. So I will maximize my risk reward on oil in comparison to maybe trading something that's more reversal based, like gold, where I'm not targeting these high risk reward trades, and I'm maybe like sometimes trading in the range and I'm getting out, right, at opposing supply or demand, for example. So now when it comes to these pros and cons, well, what does this con really mean? What does this pro really mean? The pro, you guys already know, it just means you have a higher win rate. The con is less trading opportunities, which also leads to one thing: less trades, which is common sense, right? And less trades, typically less profit in terms of your expectancy. So that's less profit expectancy. And I'm gonna do the math for you guys real quick. It will make a lot of sense why. So pros, more trade opportunities, less trades, more profit expectancy. Okay, and then obviously you guys get the gist of what I'm trying to get to. Now, the main thing here is, if you are a beginner, here's my recommendations. If you're a beginner, I'll say maybe you're 1 to 2 years of trading only. I'll say within it. This really depends on the person, right? Because each person learns at a different pace. Each person's brain is wired a little bit differently in terms of psychology and how they manage their emotions from a natural perspective, as well as how much time each person has to dedicate to trading and learning and backtesting and all these sorts of things that are necessary in order to build that positive screen time, right? So this all depends on where you are really in your trading journey and how much time, your personal experience you have. But I'll say beginner, 1 to 2 years, stick with one pair or asset. And the reason why is because during your first 1 year or 2 years, you're still locking in on your strategy. Maybe you're still even looking for a strategy, which I teach in my course, that I teach a strategy that completely works, that has proven to be profitable. Over 4,000 plus trades of backtested data, and I've proven it live as well. So if you're a beginner, I'll recommend sticking with one pair of asset because you still probably are currently refining or have not found a strategy or system that fits your psychology yet. Okay, that's why I highly recommend sticking with one pair of asset if you're a beginner. If you're an experienced trader, maybe 3 years plus, okay, this is just a rough timeline. For example, like if I had a good mentor when I started trading, I didn't, by the way, but if I did, like for example, if I just started trading and I took my course, for example, I could probably be profitable within less than a year, right? If I'm putting in all the time and effort that I put in my personal journey, less than a year, learning from the right mentor, which is what I provide in terms of value in my course. I'll let you guys know the straight to the point, the correct information in trading and what is wrong in trading, because there is such thing as a wrong in trading in a sense, because there's a lot of false information online that's being spread about trading as well. So definitely be careful of that. But if you're an experienced trader, I would say it's completely okay to expand to trading multiple pairs or assets. And the reason why is because you will make more profit in terms of expectancy. And when I'm talking about expectancy, I'm talking clearly about your risk reward, your net risk reward, okay? Because at this stage in your trading, you should, by 3 years, I hope, have a refined trading system, trading plan that you follow. So like an exact trading strategy to the T that you know. So if I open a chart right now, you can tell me exactly what your strategy is, your entry, your exit, your stop loss, how you manage your trade, your TP. Those are the main things in your strategy, as well as confluences you use and any external factors you also utilize in your trading plan, as well as certain rules that you have in your trading system, as well as what sessions you're trading or what time frames you're trading on, what's your time frame entry, what's your analysis entry on, what's your structural entry on, what's your high time frame analysis on. There's so many things I can name right now on top of my head that I go over in my course, specifically tailored to you guys. But for those that are still beginners, those are things you definitely want to be thinking of, okay? And that is where the experienced traders are ahead in the game. They have all this down to a T. They don't even need to write this on a piece of paper or maybe in their journal. I would recommend definitely to write it somewhere. But at some point it becomes muscle memory, right? Just like, for example, your first time working out. You're not familiar with the form of working out, things like that. But trading works the same exact way. You create these neural connections inside your brain and you know exactly what to do. And if you're executing each and every single day, it will become a habit for you, right? So once you build this habit and consistency, it becomes like second nature to execute your trade. Once you see your entry confirmation, boom, you enter. Stop loss, TP, you let it run, right? You don't hesitate. You don't have any emotional mistakes that you're really making. Everything is very solidified at this point. So that is why it's completely okay to have multiple pairs on your screen. But if you're a beginner, right, again, you're still not too familiar with the trading system, stick with just one pair asset. Because if you try as a beginner to trade multiple things, you're just going to confuse yourself even more trying to do all this analysis on several different assets. Also, you want to collect data on one asset first on your strategy, right? You don't want to be collecting data in the beginning on every single asset possible, because first of all, you're not going to be trading every asset possible, and second of all, you're still not familiar with how your trading system works. So why add in more confusion and more mess to your trading plan or backtesting results when you can simplify it down to one asset and collect data on that? And once you collect data on that, then you can go from there to determine whether or not you should add more pairs, or maybe collect data on a different pair, or make refinements to your trading system. Because at the end of the day, it's all about your trading system and how much refinement you can make and how much profit you can optimize out of your trading system. Because you want to be able to find the best optimal way where you can maximize your winners as well as maximize your win rate. And that is something I've already done for all the course members, because I teach them my exact way of managing my trades, as well as contextual things that will maximize their expectancy. So this is my recommendations right here. Now here's the thing. Let's go over the more profit expectancy part. Okay, let's say we have two traders. Trader A trades just one pair. Trader B trades, let's say, 3 pairs. Because for me personally, I trade 4. For those that are wondering, I teach in my course, I trade 4. I trade gold, ES/SPY, oil, and Euro USD. 4 pairs for me. So let's just say 4. Screw it, we'll just put in 4. And one more thing before I get into the math of this, I want to talk about how this also depends on if you're intraday trading, scalping, or swing trading. That matters a lot to this as well. Because, for example, I can give an example real quick. Scalpers, you can, depending on what your time frame you're scalping on, like you could be entering on the seconds and exiting within a few seconds or minutes. You could like take up to, let's say, 10 trades a day for scalpers. That's like very realistic for scalpers, right? Everyone's definition of scalping is different, I know. My definition is typically you're holding trades only for a few seconds up to a few minutes, no longer than 30 minutes really, or even 15 minutes. Most times it's very fast, in and out, catching those high volatility moves. So up to 10 trades a day. Now, if you're a scalper, you really do not need multiple pairs. You just need one. Why? Because you're taking up to 10 trades a day, and 10 trades a day, if you just think about it in terms of time wise, that's a lot of dedication, right? That's a lot of analysis, right? And if you're taking 10 setups a day on, let's say, 4 pairs, that's 40 trades a day. And I guarantee you will not be able to manage your positions and manage entering and exiting 40 trades a day, because you're basically going to be jumping from one trade to the next, to the next, to the next, without enough analysis and focus on one asset. You're most definitely going to confuse yourself. So for scalpers, for example, you would ask you, it's more probable to just stick to one asset or pair. Now, if you're intraday trading like me, most of my trades last 30 minutes, okay? That's just based on my data collection that I got from 4,000 back-tested trades, the trading system I teach. Most trades last no longer than 30 minutes to hit TP. So intraday trading, I'll say up to 5 trades a day. For me, I roughly average about 5 trades a day. So that would be me, 5 trades a day. This could be honestly low-key. It could be up to, right? So it could also be 1 trade a day. All depends on your own trading system and rules and what you have backtested data on. But for example, for intraday trading, you can have multiple pairs. You can have multiple pairs assets, because you're taking a lot of setups. Your setups are occurring a lot less frequently, so you have that time management to be able to switch between assets and pairs and catch those different opportunities. Last but not least, swing trading. This varies a ton. If you're swing trading or position trading is more like shares really, and holding for like months to months. Swing trading I'll define as, let's say, 1 trade a week. Okay. 1 to 2 trades a week. I think that's fair. So typically you're holding your trades for about 2 to 3 days, or maybe 1 full day. Swing trading, you can have several pairs or assets. You can have even more if you're swing trading. Why? Because your setup does not occur often. So it's an inverse correlation. The more often your setup occurs, the less pairs you want to trade. So as your frequency of your setup occurs, number of pairs decreases. This is an inverse correlation that you want to be following because we don't want to overload our brain with information, and that's why we follow this rule. The more setups you have, the less pairs you should be trading because you already have enough trading frequency. You already have enough trades. You don't want to overdo it. And that overdoing will lead to taking bad trades, taking revenge trades, and many other problems, right? You have even more drawdown as well. So once I cover this, you guys should know this is how it works. Now, one thing I do also want to mention is market conditions. This is why for people that intraday or swing trade, having multiple pairs is actually a very big pro. Again, I'm not talking about now for beginners. Beginners, regardless of what type of trading you're doing, I say stick to one asset. Okay, even if you're doing swing trading, then maybe just have two if you're a beginner, but still try to stick with just one as a beginner because your goal is not to make money as a beginner. Your goal is to master a skill, know your system in and out, and the strategy, right? You want to have that set down to a T. You could care less about what the asset is because most assets, if your strategy works on one asset, it will likely work on any other asset. If it doesn't, then there's a flaw in your strategy, okay? And that's why I teach in a course everything inside my system strategy that makes me profitable on any asset. I backtested my strategy on all these assets and they all come out profitable. They have slight variations in terms of their win rates and risk reward. Like I mentioned, oil might have a lower win rate, but my risk reward that I catch on my winning trades are way bigger than, for example, gold, where I have a high win rate, but the risk reward is not as high as oil. So you want to be collecting data for sure on this. Right now in this session, I'm talking about strictly to people that are experienced traders. So for experienced traders, again, make sure that you're following this rule, right? This rule right here. And the thing I wanted to talk about was market conditions, because if you are an experienced trader, unless you're swing trading, if you're only focusing on one pair, if that one pair consolidates for 1 month in a range where it doesn't fit your entry or setup criteria, like for example, bad market conditions where the prices goes in one direction without any pullbacks for a month, or maybe when price does tiny consolidation ranges, accumulation where you cannot trade at all for that whole month, you don't want to be sitting on your hands as a trader, especially as a full-time trader. You need income coming in, right, every month, typically, at least, unless you're making a like big months where you can have these breaks. Otherwise, typically for most people, you want to be taking trades every single month to have that steady cash flow of income. And people say trading is not steady income, as in you're not going to win 100% of the time. However, you can definitely make it very steady and stable income applying the proper strategy. Like for example, the strategy I teach, like 80% of my days end green, and 20%, I would say, sometimes less than 20% of my days are red. And on those 20% or less days are end red, they are either very close to break even because of risk management, or they are way smaller than my green days. My green days are typically 2 to 3 times bigger than my red days. So that outweighs the red days by so much, where I can fully cover one single, I can cover multiple, like 3 red days and 1 single green day. That's it. Now I'll be at break even or even in profit. So that's why having multiple assets is very important, because you don't want to be forcing trades on one asset if there's bad market conditions. Same with intraday trading. If one day, for example, one day gold is consolidating, you don't want to be focusing on gold then. You want to be focusing on maybe an asset like oil where it's trending that day, because all these assets have different fundamental characteristics that affect how they move. That is why you will find seasonality differences between these assets. Like summer gold will move a lot more different than winter time for gold. And all this comes again from screen time as well. Seasonality, trading different seasons, that all completely comes from screen time and experience. And I'm just telling you guys this ahead of time so you guys can prepare for that. So now we can finally move on to the last thing, which is the math, statistics. Okay, here, actually we have it right here. we do right here. The statistical edge. Let me delete this. Trader A trades just one pair. Pretend these are both experienced traders, okay? You should remember, you shouldn't be comparing yourself like this if you don't have experience or don't know your trading system enough. This is for people that have their system down and they just want to maximize their profits. Trader A just trades one pair. And let's say, pretend both these traders trade intraday. Both intraday traders. So let's say they're both intraday traders. They both take 2 trades per day. Let's say, yeah, we'll say 2 trades per day. Let's say they both take 2 trades per day. I wouldn't say take 2 trades per day. This is their setup occurs 2 times on average per day. Now here's the thing. Trader B, they trade 4 pairs, meaning they can have up to 2 times 4, which is 8 trades per day. Because they have their setup potentially occurring 8 times in a single day because it's spread across 4 different assets. Not necessarily, but that's up to, right? Versus Trader A, they just have 1 asset, so 2 trades a day on that 1 asset because that setup occurs twice a day on average on that 1 asset. So hopefully this math so far makes sense. This is very, very basic math. Next thing we want to focus on is, let's say they both have the same expectancy. Let's say both traders have a 50% win rate with 2R. This is very, very minimal. Like, you can have way better statistical edge than a 50% win rate at 2R. What I teach is way better than this, but I'm just showing you guys just using like very, I guess, the most mid trading statistics possible. So let's say they both have these stats. In fact, let's say, yeah, we'll go with this for now. I want to prove something real quick. So let's say 2 trades a day, actively about 20 trades, 20 active trading days a month. So times, we do times 20, so that's 40 trades per month on average. Now this trader is 8 times 20, which is 160 trades per month on average, right? And now using math here, 50% win rate. So 20 losses, 20 wins, 20 losses. But those wins are 2 times, right? So 40 for their wins, risk reward, and then their losses is just 20. So their net return is 20 RR for the month, taking 2 trades a day, 40 trades a month, trading 1 asset. Not bad, right? If you're risking 1% a month or a trade, you're making about 20% return. Now, other trader, they have 80 times 2, 160 risk reward, and then the other half is their losses. So minus 80R, their net return, which makes sense now, is literally 80 RR, which is 4 times the return of Trader A because they're trading 4 pairs compared to 1. So you guys can see this is a huge difference in return. 20 RR versus 80 RR is a significant difference in return. Over the span of a year, Trader B will have way more returns in terms of the account balance than Trader A, considering they have the same risk management of risking 1%, for example, per trade. So this is why this is very important, and I wanted to talk about this. So let me put this somewhere here. Okay, I think this is good here. Should be a good format. So you guys can see the difference between these 2 traders, right? In fact, let me make this cleaner. So if you guys can also take a screenshot if you want. So Trader B, if this thing cooperates, Trader A, Trader B. So you guys can clearly see a difference, right, in return. Even though trading the same strategy, but you're taking more setups, and eventually you will have way more profit. Now, you're not forcing more trades here. You're just taking more trades based on your setup. So make sure you also understand that difference. Now, remember what I mentioned earlier? If you trade 1 asset, you probably have a higher win rate than someone trading 4 because you're more focused on one thing. You know, you have your bias less mixed up in your head, and the more focus you have on 1 asset, there's diminishing return, right? Someone focusing on maybe doing analysis for 1 hour ahead of time is not going to necessarily have much of a better return or win rate than someone doing 4 hours ahead of time of analysis or pre-market plan, for example. Just give me an example of the trading system, right? So I would say, let's do it this way. Let's say there's a 10% win rate difference. At 2R, this is pretty significant. So 60% of 40. You know what, let's just change this to make the math easier. Let's say they are at, what were we at, 50% before? We'll say, yeah, screw it. I think 60% of 40 is 24, if I'm not wrong. So that's 48 RR minus 16. Your return outcome now becomes 32 risk reward, which is almost double 20 risk reward, right? You can see 10% win rate difference still makes a very big difference in your net return right here. I'm doing the math right here. I believe so. That should be good math. Yeah. So yeah, you guys can fact check me on this, but I'm pretty sure I did the mental math right there. But you can still see, even with a better performing system for Trader A, they still don't make as much return as Trader B. Trader B still is making more return than Trader A with a worse trading system. Now at some point, if Trader B starts failing his system, or Trader A's system becomes extremely good, like an 80% win rate, then of course Trader A might potentially catch up. So if 80% win rate, that would be, this should be 4, 8. That should be 32 and 8. So in this case, Trader A is catching up now. 50, 54? No, 56. Nope. But yeah, no, it was 56. Yeah. So you can still see, even with the 80% win rate at 2RR, Trader A is still making less money than Trader B in terms of net return, even with a way better system. So this clearly shows me statistically why I personally prefer trading more assets, because I already have a lot of experience. I know my exact setup, and I would love to take my setup a lot more times in terms of frequency, because then that means a lot bigger return, and I don't have to manage or maintain as high or as good as of a trading, for example, system in terms of stats to match up with this, right? You guys can see there's still a difference here, regardless of Trader A having a way better trading system, given high quality setups. Now, I would say your win rate is not going to jump from 50% to 80% if you're trading just one asset. At most, probably 70%. But giving Trader A the edge, Trader A still makes less money than Trader B. So this basically sums up today's video that I want to talk about, essentially, of what my view is on trading multiple assets and whether or not you should or you shouldn't. So again, follow my recommendations here. If you're a beginner, trade one asset only, please, until you're profitable consistently. Once you're profitable consistently, you can completely okay to expand to trading multiple assets. Again, also keep this second in mind. So this is number 2, this is number 1. Number 1, focus on this. Number 2, focus on this, right? And then these 2 boxes are just general knowledge to be aware of. But mainly, again, if you check the box for an experienced trader, you can then move on to this box, number 2, which then you decide whether or not you want to take more trades or not. If you're a scalper, you really don't need to increase your assets. If you're intraday or swing trading, you definitely should at this point to maximize your compounding of your trading account. And trust me, when I say compounding is real, I'm talking from experience. Personal account compounding is legit, okay? So keep that in mind and just continue trading, and just make sure to stick to your trading plan at all times. And yeah, that's it for this video. Hope you guys did take a lot out of this video. If you guys are interested in indicators I use on my trading system each and every single day, feel free to check the link in the bio at sensationaltradersuniversity.com. Also have my beginner course as well as my advanced course as well. They are both currently around like 50% on sale for those that get in early. If you don't get in now, you're gonna miss out on the sale, and it's going to go back to its original price, which is a lot more expensive. So I'm trying to make it as affordable as possible to those that can still get it now, that are eager and willing to really put in the money and effort into monetizing the skill of trading and making money basically whenever and wherever you want, with the freedom and time access that I have. So again, that's for watching, and I'll see y'all in the next one.